there's one other thing that we're doing that we can talk about, and I'd like to introduce Tamara Winnikoff, who's going to talk about a campaign that we're just getting going called Make a Fuss, Make a Switch. Tamara joined our group about a year ago and is currently on the committee, and she's helping to spearhead this campaign. So over to you, Tamara.
Thanks, Dominic, and welcome everybody. I'll just speak briefly because the main body of what you'll come to hear is Pablo being interrogated by Sue. But I just wanted to briefly explain that tonight's event is part of a larger campaign that Climate Change Balmain-Rozelle has taken on, which is to work with market forces to deliver something, a goal that we set ourselves, which is that we would get 100 people to make a fuss and or make a switch in relation to getting your bank or your super fund to divest their funding investments from fossil fuels. And market forces, as you probably will have, you may have already seen, or we hope that after tonight you'll go and have a look. Their website is absolutely stacked with wonderful, useful information. And if you go to their campaigns, you'll find that there are two sections or more, but the relevant ones to what we're doing are banks and super funds. And what they've done is they've done an analysis of, particularly for the banks where the information is much more readily disclosed than the super funds. They've done some analysis of where the funding or the money that they accumulate is being invested. And it's quite an eye-opener, actually. It's really revealing to see where your bank is actually putting your money. And so our aim is to, if you haven't done this before, and some of you may have done it already, to write to your bank or your super fund and just ask them very politely but very firmly to divest their funding away from fossil fuels towards renewable energy or whatever else that's ethical, an ethical investment. Some of you may find that there are reasons why you won't be able to take the next step if they don't do anything, if they don't respond, which would be to tell them that you're actually going to move your money and do it. I've actually moved my funds from the Commonwealth Bank to Bank Australia because in doing the sussing out, Bank Australia seemed to me to be the most ethical choice around, but you have to do your own thinking about that. And it's really worth doing. I feel a glow of virtue and satisfaction having adhered to my principles about not giving money to a cause that I think is destructive of the world. So I would urge you to, after this session, to actually take some action. Market Forces has made it very, very easy for us. So if you go to the Market Forces website, you'll see that they actually have a letter format that you can simply fill in and it can go directly to your bank. And you can do a similar thing for your super fund. The other thing that we'd really like you to do, if you haven't done it already, is to go to the Climate Change Balmain-Rozelle website, and you'll find there, as part of this campaign, which you'll see on the campaigns page, you'll find that there's a survey, and we'd really like you to fill in that survey ASAP. The survey only takes 5 minutes, a very straightforward survey. It's only 5 questions, but it's in a way intended partly to help you to understand or to think about what your bank and super fund are doing and what your attitude to that is. And partly it's to give us information, because there's also, if you want to fill it in, there are comments requested after each question. And we'd be really interested to hear your thoughts on each of the questions if you've got a minute to fill that in. So
Tamara, I've just put the link there in the chat if anyone wants to copy and paste the link for that survey.
Wonderful, thank you very much. Oh, can't see it on mine.
Yeah. I'll redo it. Oh, okay, I think it went to everyone in the waiting room.
No, I'm not seeing it.
No, I'll send it again.
Okay.
Thanks for letting me know.
So that's really what I wanted to say, just to thank you for joining us tonight and to encourage you to actually take some action and to realise that to make a fuss is probably going to be very easy and straightforward. It's really just filling in that the letter format that is on Market Forces site and letting your bank know that you're not happy about the way that they, if this is the case, and I think just about every bank that there is, except for a couple, do invest in fossil fuels, and they need to know about it. And it's surprisingly potent when, as we know, each letter or email that an institution gets or a politician gets, they read as representing the views of at least 100 people. So it's a powerful thing to do and a very easy thing to do. So now over to
Dominic.
Or Dominic. Oh, can't hear you, Dominic.
On mute.
Thought I had. Beg your pardon. I'll be the bridge for this tomorrow. Thank you very much for that. And now, Jemima, if I can ask you to start the recording now that we're going into the main part of the meeting.
Yes, I've done that already. Yeah.
You've done that. So just everybody be aware that we're recording this meeting. And it's up to you if you want to be visible on it. You won't be audible because you're muted, but we will be recording. So for those who aren't here, or those who can't or want to share it with their friends, this recording will be up on our website in a day or so, just as soon as we can get around to processing it and doing everything else like that. So now over to the main part of the meeting, and I'd like to start by introducing Sue Lannin. Sue is from ABC Radio Current Affairs. So we have two sort of radio reporting specialists, experts tonight, because Jemima, who's looking after all the techo and the switching for us, is also a veteran current affairs reporter, and they both got a lot of experience across the Asia Pacific region. Sue joined Radio Current Affairs as a finance reporter, so that's relevant tonight, in 2009. And it says in her little thing on ABC's website that she spends her time grilling chief executives, analysing the economy and dissecting company balance sheets for the ABC programs like AM and The World Today and PM. So Sue's going to introduce our speaker tonight, Pablo Brait, and we hope he's going to grill him, but maybe just gently after his talk. So over to you, Sue. Thank you.
Thank you, everyone. So as we know, in order to survive, coal companies, the oil and gas sectors need finance. Now, over the last 10 years, myself as a finance reporter, I've really seen the rise of groups like Market Forces. Market Forces, essentially a lobby group that aims to pressure banks, insurers, superannuation firms to rethink their investments in the fossil fuel industry, showing that investors and even small shareholders can influence what a company does and its future investment. Now, Pablo Brait is with Market Forces. He's been a campaigner for more than 10 years, trying to encourage fossil fuel industries to switch to renewable energy. He's currently, as I mentioned, a campaigner with Market Forces, and he's going to talk to us tonight about what individual shareholders can do to try and get fossil fuel companies, and particularly, in particular, the industries that finance them, banks, superannuation firms, and insurers. What can individual people do to influence the flow of money to the fossil fuel industry, away from the fossil fuel industry to the renewable industry? Pablo, over to you.
Thank you very much, Sue, and thanks everyone for coming along. I'll just get started, introduce Market Forces first. So, you know, as was mentioned, we're an organisation. We believe that the institutions that are charged with managing our money should use it to improve rather than destroy the Earth's capacity to sustain life. and we're increasingly expanding our work across a number of areas. So I guess kind of pushing and shoving our economy towards low carbon. So our aim is to isolate the fossil fuel industries, both politically and financially, and shut off their access to investors and money. So
just let me know when you want me to share your PowerPoint.
Yep, I will let you know that. Sorry, I'm just trying to fix up the sound here. So we aim to provide information and assistance so that members of the public can use their power and become part of our campaigns and run their own campaigns. And we work with other organizations as well to do that. We're a totally independent group, and we do a lot of research that the media as well as environment and community groups use. And I guess it's important, a little disclaimer for the beginning of this. This presentation is definitely not financial advice. It's environmental and climate advice on the different parts of the finance sector. So if you could go to the second slide, might as well jump straight down to that one.
The second slide, just 1 minute.
Yeah,
so
slide 2.
Sorry, you there seeing that very messy share screen there? I will,
that's all right.
Get onto slideshow. Okay. Oh, it's not coming up. Hang on. I'm just going to stop share there because it seems to have stuffed up for some reason.
That's all right. I mean, I can keep talking anyway while you're sorting that. So, what does a fossil fuel company need? So essentially, if a company wants to grow, build, expand, expand a coal mine, build a new coal mine or a gas field, a new power station, it needs 3 things from the finance industry. And this doesn't include things like government laws and regulations and approvals and those sorts of things. So yeah, it needs 3 things. Debt, which is mainly through bank loans, as well as bonds. Insurance, so things like health and safety insurance, property damage, public liability, professional indemnity, etc. And investors, so again, mainly for publicly listed companies, obviously that's shareholders. So they're the things we'll cover today, these areas and how we can work to ensure that fossil fuel companies, can't access these services because of the climate impacts that these industries are having, and because we obviously want to limit climate change as much as possible. And I think it needs to be said that in the 5 years that I've been working with Market Forces, I've seen a really significant shift, and the shift is accelerating. I think last year was it felt like a tipping point with regards to the finance sector finally waking up to the threat that climate change poses, in particular the coal industry, thermal coal industry, but there are shifts on oil and gas happening as well, as they need to. And so I know that the government policy context in Australia can be quite despairing with a government essentially run by climate change deniers. But the finance sector has to live in the real world and has to be attached to reality. And so we are seeing those shifts well before government policy shifts are happening. So if you go down to the next slide. So debt mainly comes from banks. The big 4 Australian banks have all pledged to support the Paris Agreement, in word at least, but they are still very heavily involved in fossil fuel lending. And around 75% of the fossil fuel deals in Australia involve at least one of the big 4 banks. So they are really quite critical in terms of facilitating the lending to coal, oil and gas projects. So this graph is showing the lending between 2016 to 2019 of the big 4 banks. And this is a quite general one. We have also broken it down to specific companies. So like ANZ, NAB and Westpac have all loaned over $400 million to Whitehaven Coal, for example. The big gas expansion companies, Origin, Santos and Woodside, Combank has loaned over $1 billion to them in the last 4 years. ANZ about 867 million, Westpac 548 million, etc. And one of the other things we've found is that their lending to renewables is far lower than their lending to fossil fuels. So, for example, the Westpac ratio is for every dollar loan to renewables, they loan $2.70 to fossil fuels. This is from 2016 to 2019. And for ANZ, which has the worst ratio, for every dollar it lends to renewables, it loans $5.50 to fossil fuels. And we have on our website, and I'll have the web links at the end in the last slide, but marketforces.org.au/compare banks, you can actually check these big four banks as well as every other bank, you know, that operates in Australia and where they stand on fossil fuel lending. So if you go to the next slide. So this is just a bit of a summary of the different policies of the banks and how we judge them, I guess. So as you can see, there's a lot of work to do with some small steps taken by CommBank and Westpac, which is essentially both of them, CommBank last year, Westpac this year, have said we will be exiting thermal coal, or our thermal coal exposure will go to zero by the year 2030. But there's a lot of other things they still need to do. So phase out all fossil fuel exposure in line with the Paris Agreement, rule out new or expansionary fossil fuel projects, that is from yesterday. And obviously they still have relationships with companies like the ones I've mentioned, like Whitehaven and Origin, etc., whose business plans are essentially betting on the failure of the Paris Agreement and the failure to properly tackle climate change. So we think the banks should be cutting off their relationship to those. In terms of what we do and how we have convinced the banks at least to take these small steps that they already have, if you go to the next slide, and this is how we get them to go further. So by running public campaigns. So one of the key things we do is essentially target the banks and their brand. So I find it quite strange because most banks, I mean, everyone just seems to just hate the banks and fairly equally between them, but they put a lot of money into their advertising and into their brand development. And so that's an effective way. And so this is just an example of an ad. We did a satirical advertisement with the fantastic Max Gillies, where his character was called Coal Funder, as you can see, and it was raising money for one of our, was a crowdfunder for an advertising campaign we were running on Westpac at the time. If you go to the next slide. So this was in Melbourne, obviously not this year. And you know, the other thing we do is we mobilize customers, the general public and the shareholders of the bank to pressure them to take a stand, the stakeholders in the bank. So this is a photo of a divestment day we ran where ANZ customers were lined up at the ANZ branch in Burke Street Mall, and one by one they went into the branch and shut down their accounts and told the bank why they were shutting down their accounts. So these are quite powerful actions, not just, or I'd say the minimal part of the power of the action is the actual shutting of the account. And the more significant part is the public nature of it and the fact that it draws people's attention to it and it links ANZ as it should be linked to the funding of the climate crisis. These days, if you go to the next slide, we've shifted a lot of our actions online. So this is an example of a tweet we did and people would share it, you know, if they had divested from NAB, for example. So next slide again, please. So that was debt. And now insurance, which is something Sue also mentioned. So insurance plays a critical role in helping projects and companies function. It's another essential service like debt. Insurers also, and I think this is one of the more interesting components, insurers are being hit hard by climate change. So we're seeing, due to the increase in extreme weather, you know, claims going through the roof, profits being hit because of floods, because of cyclones, because of hailstorms, bushfires obviously as well. And so many analysts looking at the insurance sector see this as an existential threat. There are parts of Australia now which are defined as uninsurable, in that the cost of insurance is, I think it was more than 1% of the house value in the yearly premium. I think that's how some people define it. I'd need to check that to be sure. And so, you know, we're looking at shrinking markets, increasing claims due to extreme weather. And for the last couple of years, an international alliance of groups has really pushed more and more insurers to restrict their coal, in particular thermal coal, though it's just as of earlier this year, it expanded it to oil and gas, this campaign called the Insure Our Future campaign. And so this graph that I've got here, this graphic, essentially shows the 19 insurers which restricted their coal insuring, the insuring of coal companies and projects between 2017 and 2019. And you can obviously see a clear acceleration in the number of companies coming through there. So if you go to the next slide, I'm not sure if any of these people you would recognize, but this action was in Sydney last year outside the Suncorp office. So we're really focused on the three major Australian insurers, so IAG, Suncorp and QBE. And between them, they own, you know, most of the brands we're familiar with, like NRMA and AAMI and all those. So we are now in a situation in Australia after, you know, really solid campaigning by people all over the country, where all three of the big insurers have set dates for ending their coal exposure, and all three will refuse to insure new thermal coal projects. IAG and Suncorp are actually out of oil and gas too, with some loopholes. So Suncorp just in August became the insurer pretty much globally with the most advanced oil and gas policy, which is they're exiting oil and gas exposure in their underwriting by 2025. Oil and gas production, that is, and extraction, and will refuse from August underwriting any new oil and gas production. So sending quite a clear message to the federal government there that they won't be involved in the so-called recovery. So if you go to the next slide. So here in Australia, our focus is on QBE. So QBE is the laggard. It's still very, you know, it's still involved in oil and gas insuring, or underwriting as it's called. And it's the only Australia-based major insurer still willing to insure new and expansionary oil and gas production projects. So we lodged a shareholder resolution with them this year, and it's likely, unless they come out with something that you know, comes close to matching or improving on Suncorp's policy, then we'll very likely be lodging a shareholder resolution with them again next year to get them to shift on oil and gas. This little action here was outside the QBE office in Melbourne. QBE scored 0 on the Insure Our Future Global Insurance scorecard. So we were giving out donuts to the staff as they arrived for work that morning. Again, pre-COVID. All my photos of this year are much less exciting than this. It's just people sitting in front of their computers. So if you go to the next slide, the third area after debt and insurance is investment. And here the superannuation funds are obviously absolutely critical. So they own around 1/3 of the stocks on the Australian Stock Exchange. There is a lot of money in super funds, and they own, including some of these you know, more evil companies like Woodside and Santos, Origin and Whitehaven that are looking to significantly expand fossil fuel extraction. So if you go to the next slide, we have a website similar to the bank's one where we track the investments of the super funds as best we can. A lot of super funds refuse to disclose where their members' money is invested, even if you as a member ask, where is my money invested, they will not tell you. And so, you know, this is a table we have on the website with most of the super funds and the different investment options. And you can see their voting record, as well as, you know, what we consider to be the different kinds of companies they're invested in. So the ones in line with Paris, the ones that we're not sure if they're in line, the ones that are definitely out of line with the Paris Agreement. So if you go to the next slide. So that's the major focus of our superannuation campaign, is getting super funds to divest from companies that are undermining the Paris Agreement's climate goals. So we have this report called Out of Line, Out of Time, and we have those 22 companies listed there. Super funds very often come back to us and say, oh no, we prefer to engage with companies. You know, divestment is such a, what do they say, like such a blunt instrument. You know, we engage, we make them better. Often when you ask for examples of how they've done that, they don't come up with them, or they have very few. And so for us, we've really laid it out in this report, and we say, well, look, engage with as many companies as you like, except these 22, engagement is pointless. Divestment is what's needed. These companies, they're very well publicized business plans involve undermining the climate goals of the Paris Agreement. You are not going to change them by, you know, having tea and bickies with the chairman and the CEO. It's time to divest. And so that's really one of the key things we do. And if you go to the next slide, one of our bigger campaigns on super funds at the moment is unisuperdivest.org. If any of you are a member of UniSuper and haven't yet signed the petition and gotten involved with the campaign, please do so right now. I would advise you to, since you're all sitting in front of a computer with internet access. And so linked to the superannuation work very closely, if you go to the next slide, is the shareholder activism work. So we are our shareholder activism work is very much focused on annual general meetings and shareholder resolutions. But we also occasionally work with shareholders to directly communicate with companies and lodge complaints and those sorts of things. And so we will work with shareholders to lodge a shareholder resolution, and then superannuation members can then lobby their fund to vote in favor of the resolution. So there's kind of a double process there. And so, and annual general meetings, they're not as fun now as they used to be, now that they're all online, but you know, they're often the only time you have to address the board and the CEO of a company directly and be in front of them. And so it's, yeah, very useful. We do a lot of, every time we show up at an AGM, and we show up to dozens and dozens every year. We'll usually record the webcast and put videos up there of some of the more powerful moments where we bring people directly impacted by the activities of the company to confront the board and the CEO. And of course, I said, you know, lodge resolutions. And again, if you're tracking the votes in favor of shareholder resolutions linked to climate change, you'll see significant uptick last year and this year. We used to lodge resolutions and get 5% of the vote, and now there was even one at Woodside that got more than 50%, which is really quite amazing, the change that's happened in the last few years. And we're starting to see really major, mainly from overseas, not so much the Australian superannuation funds, but just in the papers today, CalPERS, which is a massive Californian pension fund. BlackRock recently indicated they would improve their voting record on climate resolutions, and they're the world's biggest asset holder out of anyone. And so I think we will continue to see increasing votes for those. And we recently pushed the envelope a little further. So a lot of these resolutions are related to aligning the company's business activities with the Paris Agreement. And for some of these out of line, out of time companies, we lodged a resolution with Whitehaven and with I think it was Santos, to essentially say it's actually in the shareholders' interest for this company to wind itself up essentially, or wind up the coal or gas respectively aspect of its business plan. And so these are resolutions where even if initially they don't get many votes, they force major shareholders like super funds to consider them and to take a position on these issues. And so now we're asking the shareholders of Whitehaven to vote in favour of essentially winding up Whitehaven's coal business, because the risk of stranded assets quite clearly shows that it's better for shareholders to have an orderly exit from the coal sector than a sudden, very financially painful one. So look, I mean, we can, if you go to the last slide, there's a bunch of links there that people can look at, and this will get sent around as well by Climate Change Balmain-Rozelle. Not necessarily the slides, but the links definitely can. And yeah, just check out our website, and there's a whole bunch of stuff there for people to look at. So I think that's it for the slides.
Yeah, thanks, Pablo.
Yeah, thanks, Pablo.
No worries, Paul.
So, great to catch up then.
Okay, thanks, Pablo. Sue Lanning here. So if I'll just might kick off with a question. We've been covering market forces since they started in about 2013. I remember meeting Julian Vincent once at a AGM in Perth, probably Woodside or Rio Tinto. Now, it seems certainly, from my viewpoint as a finance journalist, that the divestment movement and the influence of groups like Market Forces in Australia, and of course groups in the UK and other places, the influence has certainly grown, say, over the last 10 years. So what do you think accounts for that?
Yeah, I mean, there's probably a few factors, I would say, that account for it. One is that our groups are just generally growing in terms of supporters. More and more people are getting on board. More and more people are feeling very concerned about the climate crisis and want to do more about it. And I think the money aspect is, critical, really, in terms of the flow of money from the finance, the support the finance sector supplies to the fossil fuel industry is significant. The fossil fuel industry couldn't survive without it. And so I think people are realizing that, this is an important link to make. And especially in places like Australia, where we've been banging our heads against a wall, government policy-wise for years and years and years, and it's just been very hard to break through. This is a way to get really tangible results and stop projects from happening despite government support for major projects. The other one is, I also think that, our campaigns are starting to reach a bit of a critical mass in terms of waking up the finance sector, and showing them that there's more and more people out there wanting them to do the right thing, combined with, I think, an increased understanding around climate risk and directors' liabilities in terms of how they're managing a company and how they're managing climate risk in a company. There's been more, legal opinions coming out about that. And just the fact that, the climate crisis is just getting obviously worse and more terrifying. And so, even a corporate CEO, can't kind of look past that. A lot of them do, but
Okay, well,
hopefully not too many more.
okay, thanks, Pablo. Now we've got a question from Dominic Case. Now, Dominic is saying, I'm not a financial expert, but I understand that if my student is persuaded to divest its shares in a particular fossil fuel company, it does that by selling them to another investor at the current market rate. So it's not actually pulling money out of the fossil fuel company. So can you step us through what the benefits of divesting are, apart from knowing that it's not my money that is funding coal or gas?
Yeah, sure. And that is, obviously that's a point for some people that they personally don't want their money funding this stuff. And so there's a moral component there. In terms of the divestment movement, it's interesting. When it first started out and it was launched in Australia in 2013, Bill McKibben from 350.org came over from the US and did a big tour. And the initial purpose was not a financial one necessarily. The divestment campaign was around political stigmatization and weakening the fossil fuel sector politically. Obviously, the fossil fuel sector is one of the most politically powerful industries, ever created by humanity, if not the most powerful. And so, it's obvious in countries like Australia, which is a major fossil fuel exporter, that they have a lot of political power. And so the divestment movement was really about having institutions like super funds, like churches, like universities, take a stand and say, we want nothing to do with these industries, and that would weaken them politically. But I have seen reports that the divestment movement has now gotten to such a point that it is actually impacting share price to a certain extent, but also just the ability of companies to access more capital. And, they have to go to more and more kind of, I'll just give a quick example. So for example, there's a coal port in Queensland called Adani Abbott Point Terminal, which has just been renamed to North Queensland Export Terminal. So they have a lot of debt. Adani bought, when the Queensland government privatized that port, Adani bought it for $1.8 billion or something, and it was 100% debt funded. So what they've been doing is they've been refinancing that debt. They pay the interest, and then the principal they refinance every few years. They get a bit more debt to pay back the principal of the previous debt. So what's happened is, with more and more banks, there's almost 50 banks now saying we won't go anywhere near Adani's coal operations in Australia. So they've now had to go to banks, which I've had one bond trader describe as the F team. So essentially, people, when these banks approach a bond buyer and say, hey, can you buy bonds in Adani Abbott Point? They look at the banks that are promoting these bonds, and they're like, I'm not going near this thing, purely because of because the level of the banks that Adani has had to go to. So there's all sorts of effects, I think. But it was primarily one about weakening the fossil fuel sector politically.
Okay, we've got a question now from Tamara. So Tamara is saying that now that COVID-19 has thwarted our capacity to publicly demonstrate our opposition, how can we best publicize the actions we take?
Yeah, so social media is the way to go at this point with where we are. So, and you do things like take a photo of yourself. If you've sent a letter to the bank, for example, with the letter, or if you're able to go and stand outside a branch and take a photo, depending on where you are in Australia, you can do that, post it on social media. Let us know as well, and then we'll amplify it on our social media channels. That's really important as well. We love it when people tag us on Twitter or send us an email and say, here's a photo of me divesting from Westpac. This is my name. And then obviously with your permission, we would share it. So yeah, that's where we're at the moment. And I have to say, when this COVID stuff was hitting us back in March, we were quite concerned that there would be a freeze in the announcements of companies saying we're restricting our exposure to coal, we're restricting our exposure to oil and gas, and there just hasn't been. And we've been able to run campaigns, using email and phone calls and social media, and not, in-person protests, although we've done that a little bit in places like Queensland and other places that aren't so locked down. And we haven't seen a slowdown. If anything, there's been an increase in finance sector corporations announcing fossil fuel exposure restrictions.
Now, you mentioned the importance of AGMs during your talk. It's one of the few chances that investors get to question the board and the chief executive. So how important is it for individual investors to go to an AGM or take part in a virtual AGM? And what can they do if they're concerned about fossil fuel investment?
Yep. Yeah, really encourage people. I mean, through your super fund, you don't have the right to vote or show up at an AGM. But if you have your own shareholdings or have a self-managed super fund, then you can. And really encourage people to show up at AGMs. Yeah, these days they're online, so you can just, you know, you use your shareholder reference number or your HIN, and you know you can log in. And have a question ready to go to ask. So sometimes if you're on the phone, you can ask it on the phone, or if you're watching via the webcast, then you can type it into a box. They don't always answer your questions, but very often they do. And also, if you're interested, get in touch with us, because we're doing this stuff. Just today, we were at the Commonwealth Bank AGM. Tomorrow we'll be at Horizons AGM. Next week, I personally will be at both Suncorp and IAG's AGM, asking questions there. So we're at lots and lots of AGMs all the time, and we're happy to work with you to develop a question if you want some help.
Yeah, just saying.
Okay.
Indigo.
Now we've got a comment from Derek. What about the impact on share prices, Pablo? Divesting from shares depresses the share price. Does that also have an impact in influencing a company's decision whether or not to invest in fossil fuels?
Yeah, I mean, in theory it would. I'm not sure we've seen enough kind of sudden divestment to see that happening. I think it's possible it is happening with some of the, like Whitehaven or some of the pure play thermal coal companies in particular, whose share prices has been falling quite significantly. But mainly the share price of a company like Whitehaven will track the coal price. So it's possible. I'd need to see some figures and some reporting to see whether it's actually happened. But in theory, absolutely. If enough people are dumping the shares of a certain company, then the price goes down, and then it's harder for them to raise capital via those means.
Yeah, sure. But as you said, with most resources companies, it's got more to do with commodity prices. That seems to have the biggest impact at the moment on the prices of the share price. Now we've got Jemima asking, some of the big coal projects in New South Wales, like the Wilpinjong mine near Mudgee, are owned by companies like Peabody, the world's biggest coal company. They go under the radar a bit. They're not on the stock exchange, obviously, in Australia. Have you been able to place pressure on a company like Peabody?
Yeah, on occasionally, not Peabody in particular, but we do work with allies overseas, in Asia and Europe and North America, to pressure companies there. I mean, at the moment, we're really focused on fossil fuel expansions. And so companies with existing mines that are just, mining those kind of as a matter of course, we don't yet have the capacity to kind of really target those companies and try to get them to plan for the phase out, of their business in line with the Paris Agreement goals, obviously. But we often work with groups overseas. We, try to get resolutions lodged with overseas, or help shareholders overseas do that. We've had a presence at the Siemens AGM in Germany earlier this year, for example. The Wangan and Jagalingou, who are fighting Adani, showed up there. They also showed up at the Marsh AGM, which is Adani's insurance broker in the US. And so we do that sort of work. It can be quite difficult, and every country has different rules in terms of who can be at an AGM and how you lodge resolutions. but it's definitely something that we do with a focus at the moment on expansion. So companies wanting to build new coal-fired power stations in Southeast Asia, for example, or expanding coal mining here in Australia, or new gas fields, those sorts of things.
Okay, we've got a question here from Derek. He asks, Aware Super, which was First State Super, offers ethical options which exclude fossil fuel investments. They have a commitment to quit fossil fuels by some date, yet they voted against shutting Loy Yang early. Should I switch out?
Yeah, so the date they have is just for thermal coal, I believe, not for all fossil fuels. Aware Super, which is, I believe, the merger between First State Super and Vic Super. So ethical options are an interesting thing. So, I mean, off the bat, I should say our aim is to get super funds to divest all funds under management of fossil fuels. We don't really believe it should be, a consumer choice whether you're undermining the Earth's capacity to sustain life or not. So that's that. But and also the other important thing to know, like if you're stuck inside a super fund or don't want to switch because it's low fees or don't want to switch for other reasons, then often these ethical options provide a good option where to put your money, but you should check because they're not all created equal. And we are keen to do more research into the ethical options and find out which ones are more ethical or not. Some of them, you're still invested in a lot of fossil fuels, and some of the better ones, which I think like UniSuper and Australian Super have some pretty decent ones, that you're much less exposed to fossil fuels. So it really depends on what they would define as ethical or sustainable.
Now, a question along the same lines from Tamara. So what advice would you give to people who want to protest, but they're not able to divest because they're tied in through, say, a mortgage or a fixed pension?
Just get in touch with the super fund. Talk to them as much as you can, get answers out of them, force them to justify why they're not divesting from fossil fuels. That is, I do think it's from a campaign perspective, it's most useful to have both people sticking with a fund and people switching fund, because that shows the super fund that, they've still got people contacting them, asking them, demanding essentially that they do with their money what they want them to do, as well as seeing a consequence of not actually, meeting your members' needs in that area. So, if you can't or it's not convenient to switch, that's like, you can still make yourself very useful with your fund, just by really pushing the point.
Annie's got a question. Is Future Super still fossil free?
Pretty sure they are, but check our super fund page to confirm that. Their marketing is essentially, we are fossil fuel free. So I doubt very much that they would have changed that in any way.
Now, a question from Dominic. As you've said, Pablo, Adani has recently and quietly changed the name of many of its Australian operations to remove the name Adani. So does that mean it's harder to track down companies that are doing business with them? So generally, how difficult is it for market forces to trace through financial reports from any bank or super fund to discover indirect investments in fossil fuels? And I guess many layers of innocuous sounding holding companies.
Yeah, all that stuff is quite difficult, and I'm not one of our researchers, so I'm really not the expert in that regard. Some things are harder than others. So for example, we are able to track bank lending through just the reporting, specialized finance sector journals who report on deals. And so we subscribe to those. journals, and we track them and obviously put them into databases and are able to do that. Things like insurance, who is insuring a particular project or company, is very difficult to find out. So, you know, if you look at the media coverage of the Adani campaign and the insurance part of that campaign, most of the breakthroughs have come from essentially disgruntled employees of either an insurer or the insurance broker leaking that information to an activist. So it is quite difficult. In terms of the name change, yeah, it's hard to tell. You'd like to think that you know, finance sector companies aren't dumb enough to fall for a name change and, you know, accidentally invest in Abbott Point Coal Port because Adani called it North Queensland Export Terminal. So hopefully that's not the case. I mean, having campaigned on, you know, on the finance sector, I do worry because I think some of them aren't dumb enough to do something like that. But yeah, and I actually highly recommend people check out the North Queensland Export Terminal website, which is the new name for Adani's Abbott Point. I think it's nqxt.com, and just see the language twists and turns that Adani has had to use to not mention the word coal or Adani in the entire website. It's truly a masterpiece of public relations. And it's the same with their new company, Bowen Rail Company, which it looks like the exclusive role of that company is to haul the Carmichael coal from the mine to the port. And their website doesn't mention Carmichael or coal or Adani. And again, just amazing stuff there. And obviously they're not particularly proud of what they're doing, or the Stop Adani campaign has succeeded in making it extremely toxic because, you know, they're trying not to have it linked in any way. But yeah, a lot of our work is thanks to, you know, finance sector journals, as well as tip-offs and a whole bunch of other stuff.
Now, this question is from Margan Mo. They want to know, is there any update on action against Santos and the expansion of the $3.6 billion Narrabri gas project?
I don't know much about that. So we are, you know, we do a lot of work on Santos in terms of tracking their bank lending and do shareholder activism. In terms of you know, the campaign on the ground and outside of the finance part, talk to Lock the Gate, I would suggest. I know that they very recently got the you know, the Planning Commission approval to go ahead. My understanding is there's still quite a lot of hurdles to get that project off the ground.
Thank you. Now, if anyone's got any more questions, please send them through. Dominic actually has just got a question. Now, I think you said Australia's big four banks have loaned $35 billion to the fossil fuel industry since 2016. What is that as a proportion of their total business? And are you able to say how that compares with banking in other countries?
Short answer is I don't know a proportion of their business. I suspect it's, you know, a relatively small percentage compared with other business lending and home loans and those sorts of things, which is something that they often say, oh, look, it's only 0.1% of our loan book, or, you know, Suncorp will say, oh, oil and gas underwriting is just 0.1% of our underwriting portfolio. It's like, well, for a massive company, you know, it may be insignificant, but that's still, you know, $35 billion going into the fossil fuel industry. So that is often a trick that the banks will use to try to minimize their impact. I'm not sure what you mean, Dominic, by how does it compare with banking in other countries?
Okay.
Yeah, well, maybe we'll come back. Do you want to?
Do you want me to speak up very quickly on that? I'm just saying that Australia has a wonderful reputation or a shocking reputation as being a laggard on climate action in so many other areas, particularly government action. I'm just wondering if there is some kind of international league table on banking, and whether our banks are the villains of the piece as well as governments being the villains of the piece.
I think the banks are pretty major villains everywhere. I think you'll like even fossil fuel funding in Australia is there are significant amounts of money coming in from Japanese banks in particular. Also, you know, Chinese banks do a lot of fossil fuel lending. European banks, although they tend to be shifting faster than most other places, still a lot of fossil fuel lending from European and North American banks as well. So, yeah, I think there's a lot of room for change in the banking sector globally, and we're starting to see it. So I'm not sure if this is a league table, but there's an organization called Reclaim Finance. They're based out of Paris, and they've recently done a bit of a tool where you can look up a finance sector company and get details of their fossil fuel policies. And so you can check basically what each of them are saying.
Derek's got a follow-up question. He's saying if it's only, say, a small percentage of total investments, why are the banks so resistant to divestment?
Well, because they still make money off their fossil fuel lending. So at the moment they're weighing it up. They're like, how much, you know, more or less they'll say, they'll weigh up a number of things. One is the risk of, you know, of a company being able to pay it back. And so they're obviously, the fact that, you know, CommBank and Westpac are starting to, you know, basically get out of, and it looks like ANZ is as well, getting out of thermal coal lending means a few things. A, they're seeing an increased reputational risk of being associated with the company. And so that's a brand risk. They're seeing an increasing risk of stranded assets and that they're not actually going to get their money back. And yeah, they're basically the two main factors, I would say, that they take into account.
Okay, and I guess that you said that it seems like there's been a wake-up call from the finance sector in recent years. So as you mentioned, is that because of the threat of stranded assets? And we've also seen big investment firms, as you mentioned, like BlackRock, deciding to, or talking about divestment.
Yeah, I think a lot of the time, I think the tipping point has been reached on thermal coal, in that you're starting to see people running for the exit, basically. And oil and gas is still a significant area where we need to do a lot of work. Well, coal is too. I'm not going to say that that issue is solved in any way, shape or form. But there's an acceptance in the finance sector generally that the thermal coal industry does not have a future, you know, a medium or long-term future. I think they need to accept that for oil and gas as well. And the sooner they do that, the better off we'll all be in terms of, you know, accelerating the transition away from fossil fuels. So yeah, but I do think it's a mix of those. It's a mix of the stranded asset risk, but also our campaigns and the reputational risk that we cause, and the brand damage that we cause when we hold these companies accountable for their actions.
Now, Tamara's got a question. Can you advise, is there an effective way we can make a fuss in relation to companies and people like Clive Palmer, who also want to build coal mines following in Adani's footsteps?
So the best way to stop Clive Palmer from building a massive new coal mine in the Galilee Basin is to stop Adani from doing it, and thereby paving the way with infrastructure, with approvals, you know, with the rail line and all that stuff. So I think, you know, Adani is really a beachhead in the development of the Galilee Basin. And so for now, if we're able to stop the Adani mine from going ahead, then none of those other projects, which are far more speculative and being proposed by companies which can handle far less pain than the Adani group can, you know, none of them are particularly viable.
If I can just broaden it as what you see as an example of very effective shareholder action, would you say that the pressure on Rio Tinto after the blasting of the Juukan Gorge caves, we saw pressure from investors eventually caused the chief executive and 2 other top executives to step down? So would you see that as a successful investor action and something that could be, you know, a case study for other investors seeking to influence companies in a good way? Yeah,
absolutely. I thought that was, you know, that was obviously investors feeling that they needed to really take a stand there, and they took one, and heads rolled. So I think, yeah, that is a good example. And obviously it's an example of, you know, investors having to take action similar with climate change in the face of profoundly inadequate policy around whether you're allowed to destroy 46,000-year-old archaeological sites. You know, if that was against the law, then obviously it, you know, it wouldn't have happened. Similar with climate change. If we had government policy there, then there'd be less need for us to be pushing the finance sector to take a stand. But yes, that is a good example. And, you know, we'd be really keen to see that sort of investor action tackling companies like, not necessarily your pure play companies, of which there's probably very little hope for, but for example, you know, your AGLs or your Origin Energies, who claim to be, you know, well, at least AGL claims to be transitioning, but they still plan to keep their brown coal-fired power station open till 2048, which is at least 18 years too long. And so we'd love to see investors, you know, very strongly saying, no, you make a plan that's in line with Paris, or else, you know, or else we'll demand your head to roll. You know, that's the sort of thing we'd love to see from investors on climate change.
Yeah, it just shows we have to do priority on this.
Okay, if there's no more questions, I might just quickly ask one more question. Pablo, thank you so much for all your time. What do you make of big miners like BHP and Rio now saying their goal is zero net emissions by 2050? Is it credible for investors when we hear big miners that depend on fossil fuels saying, well, we're going to change, we're going to get our customers to reduce their emissions?
Yeah, so if your target is 0 by 2050 and you have no interim targets, then your policy is not worth the paper it's written on. It is greenwash. And, you know, the most important, if we're going to limit global warming as much as we can, then what happens now is more important than what happens in 2050. So there has to be interim targets, or else there's no credibility there whatsoever. I mean, HSBC at the end of last week came out with a 0 by 50 policy, and then all the media coverage had us and all the other environment groups just slamming the bank for greenwash, because there was just no detail in between, and that's 30 years away. So that's, you know, that's the key. I mean, we're seeing, you know, Rio Tinto and BHP are starting to exit the thermal coal mining. I mean, I think Rio Tinto's already done it, and BHP, BHP is having a bit of trouble getting rid of some assets because no one seems to want them anymore. They're a little bit late to the exit there in terms of thermal coal, but I mean, BHP is still involved in oil and gas expansion. But so, you know, those tangible moves are more important, and what you do by 2025 and 2030 is what will give you credibility in our eyes, not 2050.
That's
okay. Pablo Brait, thank you so much for your time, for firstly giving us an overview of how much banks, superannuation firms and insurers are invested in the fossil fuel industry, and also what investors can do, especially individual shareholders, to influence these organisations. And especially thanks a lot for telling us about shareholder resolutions. And if, of course, if anyone is interested in getting involved in campaigns, you can contact Market Forces directly.
Yeah, I'm happy
Again, thank you so much.
Yeah, thanks for
Okay,
If we
thank
can
you
all-
very much. Thank you very much, Sue. There's just one more thing that before we finish, going on to a totally different subject, but it's an announcement of something very different that's coming up next for Climate Change Balmain-Rozelle. We are supporting a very exciting solar gardens project. And I just want to spend a minute just telling you how you can find out about this. Solar gardens are an idea for people who want to go solar but can't. So if you're a renter, not a homeowner, your landlord might get in the way. You might live in an apartment, but you don't have a roof, or not your own roof. In my case, I have a beautiful tree that shades my roof for much of the day. That's a good thing because it keeps the house cool, but it means I can't get solar, too much solar energy. So what you do with a solar garden is you buy a share in a large solar array. In this particular instance, it's out in the Riverina at a place called Grong Grong, which I'm told is a real place. You buy a share, and your 3 kilowatt share of electricity as its output is sold to a power company, and you get a credit for it on your electricity bill every month or every quarter or whatever. That's a very brief summary. There is a group called Haystack Solar Gardens who are connected locally in a lot of ways, who are promoting this particular or operating this particular thing. There have been a few informational webinars about it already, but we are supporting another webinar coming up on the 28th of October. Now, if you want to know more about it, you can visit our website, or you can visit Inner West Council's website because they're also supporting it. I've just put the link to the Eventbrite link because it's a Zoom information seminar coming up on the 28th. So I put a link to that in the chat box at the moment. If you're interested, copy that, paste it into your browser now or later. Or failing that, if you don't get that, visit our website, and there's something right on the top of the front page that will show you how to get more about that. So that's just a very quick announcement on that. Meanwhile, for this evening, many, many thanks once again to Pablo Brait and to Sue Lannin for moderating and making this a really interesting session. I'd like to thank Jemima and Tamara for making it all happen tonight. I'd like to thank everybody for coming along. I'd like to thank everybody for coming along tonight. In particular, it's nice to see some people from outside of our area, because if you're on Zoom, you could be anywhere. And I think we've got some interstate people, but certainly I see a couple of people from climate groups well away from ours. So thanks everybody for joining in. Watch our website. We'll have another one of these in 2 months' time. We don't know yet, we might be talking about hydrogen, blue hydrogen, green hydrogen, brown hydrogen, striped hydrogen, who knows. But it'll be as always, the second Tuesday of the second month. So that'll be in December. That's all. It's 8:15. It's time we finished. Thanks everybody for coming along, and good night.
Thank you. All the best. Good night.
Do the survey.